Good morning, and particularly welcome to Core Finance today. Colin Hutchinson, who is the CEO of Ascent Resources. Good morning, Colin.
Morning,
I'm delighted to welcome you to the show. I've been chasing you for a long time for this interview, and I think now that a lot of ducks have fallen into a row, it's a good opportunity to get you to come in and tell us about Ascent Resources. So thank you very much for coming in.
Thank you, welcome.
I always ask people to begin with, if you could perhaps give the viewers an overview of what Ascent is as a company. How did you get here, and how much time and money, and probably, why all this took so long to be an overnight success. So it's a brief rundown. We'll get into the detail in a minute.
Sure. Ascent Resources PLC, we're an AIM-listed, European-focused oil and gas exploration production company. The main asset, the only asset at the minute, is the Petasovci field, which is in northeastern Slovenia, on the border with Croatia and Hungary. Ascent's been in country for 10 years, shot 3D seismic, drilled 2 wells in 2011, and discovered there was a commercial volume of gas there. It's taken us some time to get the gas to market for various reasons, mainly related to sort of Slovenian bureaucracy and one party in particular which has delayed the project and delayed us getting a route to market for the gas. We sort of unlocked things in a big way last year during the summer when we acquired a company which owned access rights to a pipeline which ran into Croatia, and we signed an agreement with INA, who are Croatia's largest oil and gas company, to sell them our gas untreated at the border. So that gives a route to market for the gas. We were able to raise money and fund the work programme that we needed. So over the last 12 to 18 months, we've recompleted the 2 wells. We've tied them into an existing processing facility. We've refurbished that facility so it can cope with our gas. And we've also rehabilitated and permitted the pipeline which runs from our field in Slovenia to INA's field in Croatia. And so it's that's unlocked things. And in the last month, beginning of this month, we started to sell gas to Croatia, which makes us profitable and is generating cash. And then earlier this week, we sort of had the long-awaited news that our permit has moved. It's got approved by the court, and we're on track now to get that and build our own processing plant.
Excellent. Right. Well, what I'd like to do is to dig into a few of those things. So,
sure.
To begin with, you've given us a good overview of the field and everything else, but I'd like to have a little bit more detail about what you've got, the number of wells that you're working from at the moment to be able to produce what you are. And then I know you've got some workover wells. Have you got exploration wells? What's the detail of the wells on the ground? And then clearly I'm going to ask you what your level of production is and what it could be.
Yeah, I mean, at the minute we've got 2 wells. We've got PG10 and PG11A, which are the wells that were drilled in 2011. They've been recompleted and tied in over the last 12 months. PG10, when we flow tested it in February, it flowed at nearly 9 million cubic feet a day. PG11A, when it was tested, flowed about 2 and a bit million cubic feet a day. We're producing we have a range of volumes that we can produce at INA, and we're producing sort of around 2 million, a little bit more than that, million cubic feet a day, and there's scope to increase that. How we increase it? We increase it from the 2 existing wells, and then there are a number of other wells in the concession area, and our field development plan is to re-enter and bring some of those wells into production. We're on PG 10 and 11, so there's 9 other PG wells, and a lot of those are in good locations. They're recompleted in the right sands, but they were originally drilled back in the 70s and 80s when technology was a lot different, and we think that by going back in and recompleting them in the way that we've done 10 and 11, we can get commercial volumes of gas from those wells also. The field development plan, once we've re-entered up to 7 of those existing wells, the field development plan is then to re-enter, to start to drill infill wells. And we've got geoscientists in Budapest and in the UK who have been reviewing the 3D seismic and are coming up with ideas for where those well locations should be. So the gas in place, we had an RPS report done in 2013 which assessed the sort of P50 gas in place at 456 BCF. So there's a lot of gas there, and we've got a sort of a 20-year field development plan to extract it in the most economic way possible.
So we've got 7 more wells to work on. Then the FDP would give you a lot more. So potentially, And what I'm going to be coming to in a minute, obviously, is what you're producing to sell to ENA. But as a result of the IPPC thing, things could change a bit. So potentially you could sell significantly more. I know that you've got sort of production plans for the next 12 months because you're limited by the government, are you not, to a certain time, although you can probably stretch that a bit.
We signed a 12-month agreement with ENA, which has a sort of an upper and lower production limit. We've started off at the lower end of that while we sort of see how the wells perform and see how the reservoir behaves. Over the course of the next few months, I'd hope to increase that so we get closer to the upper limit on that contract. It's not set by government, it's more a commercial arrangement between ourselves and ENA, and the reason for the upper limit is they have to book capacity based on the upper limit, so we didn't want to set it too high initially. Yeah. But if we do want to increase it, I think commercially they'd be interested to take as much gas as we can produce, because the facilities we've refurbished and constructed could cope with several times our initial production, and I think the capacity for ENA to process the gas is also significantly higher. So once we are comfortable with how the wells behave and how the reservoir behaves, then there would be scope to increase production.
So you'd increase production from the 10 and 11A wells, and what's the timescale in potentially drilling up or working over the 7 more, and then the lots more after that in the FTP?
Yeah, so we've got the plans for the next 2 wells, and we're in the process of finalising those and submitting those to the government to get approval to re-enter those. So I'd hope really within the next, ideally by the end of next year, maybe early 2019, we're re-entering at least 2 more of those wells, and then there'll be a plan where every year we do 2 or 3 wells and step production up from sort of 2 to 3 million cubic feet a day that we're producing at the moment to eventually the field development plan has us at 35 million cubic feet a day, which is once all the wells are operational.
So during 2018, you'll only be producing from 10 and 11A, albeit you might be hoping to produce a bit more.
Yeah.
So it's the year after before you get into the 2 of the 7 and then 2 of the 7 more. Is there any way that with further investment you could bring that forward and increase production and revenue before then?
It's more of a permitting and approvals time scale. I think the funding, if we needed to find the funding for extra wells, we could do that. It's more getting the permissions from the Environment Agency to re-enter these wells, hopefully. And that's the good thing about this announcement this week, is we've gone through this preliminary screening process, which is essentially a faster way of doing things. You don't have to go through the full environmental impact assessment. So I'm hoping that we can use this preliminary screening process for the well re-entries as well, which should significantly reduce the timescale. And the other thing in the announcement this week is our main objector has lost his special status, so hopefully that speeds things along.
Good. I think that's important now that we then turn to the judgment that was made, the IPPC thing, because I think there are 2 or 3 things that people would want to know about that. First of all, as you said, that you won the case and therefore you can get moving on that, and I'll come back to that in a second. Secondly, that the guy is now out of the place, so you don't get any more. So what in terms of markets, and we'll come back to revenues from all the rest bits and pieces in a minute, what's the key thing about markets in the IPPC thing? Because as I understand it, you're as a result of this and a result of building a gas treatment plant, you then attack a different market with the premium price of the gas that you're going to be able to sell to them.
Yes, I mean that's hugely important. At the moment we've got a pipeline which has a limited capacity, and we're selling to one customer, and they've got a limited appetite, a bigger, reasonable appetite for the gas, but there is a ceiling there. What this judgment this week means is we can build our own processing plant in Slovenia and put the gas into the Slovenian grid, which opens up the whole European market really to sell the gas into, and really we can produce as much as we can and put it into the grid, so it takes the sort of upper limit of what we can produce. So it's hugely significant that the judgment and the fact that this individual or this organisation have been barred or taken off the preferential list.
The key questions here are: how long is it going to take to build the gas plant? How much will it cost? And what's the difference between the pricing of the gas that you get now than you will then?
So how long it takes, I think it probably takes around 12 months. We've got quite well advanced plans, and we've already been speaking to vendors about the sort of plant we need. So it probably takes around 12 months to get it actually installed and up and running. The cost of the plant, somewhere in the region of 10 million euros, hopefully a bit less than that. 10 million euros would buy you the plant and the metering station, which we need to construct at the entry point to the national grid. And then what that gives you in terms of pricing is probably a 40% uplift on the gas sales price, because at the minute we're selling the gas untreated to the Croatians, who have to spend money treating it before they can sell it. So we could sell at Central European gas hub price.
So on those numbers and time frame, I'll come back to how you're going to pay for it in a minute. But if it takes about a year, would you imagine being able to sell gas at a higher price in, say, the middle of 2019?
Yeah, that's probably fair. Sometime middle of 2019, we'd have the plant up and running and be selling gas at a higher rate.
And that would still be coming from 10 and 11A, but by then you might even have a couple of the workover wells to be able to add into it.
Yes.
And tell me, as the amount of gas that you're producing, say you're sitting here in the middle of 2019, are you then going to be able to say, we're not going to sell any of the cheaper gas to INA and sell it all into the Slovenian and European gas transmission, or are you still committed for the longer term and you will produce the lower price gas to them as well as some of the higher price gas?
Well, that's really why we signed up to a 12-month agreement with INA, because that's a fixed term. Once we come to the end of that term and we're in process of building our own plant, hopefully the pricing and the structure of the INA agreement maybe changed a bit, and we'll sell the gas wherever there's the best margin then.
Excellent. Now, let's just do how you're going to pay for the... Because I'm going to come back to revenues in a minute and so on. It's 10 million euros, which compared to the 45 million or whatever you've already put into the project, it isn't huge. But the balance sheet has what sort of cash and what sort of debt and so on in it?
So cash, we did a placing there not so long ago, 1.5 million. So we've got the bulk of that cash left in the bank. We had to spend some, but obviously that was the reason for doing the placing. But we've got a good chunk of that left. And debt, we're virtually debt free. I mean, the balance sheet has cleaned up dramatically over the last sort of 2 years. We did at one stage have 12 or 13 million pounds worth of convertible debt sitting there, and that has all, bar 50,000 pounds worth, been washed through. So the balance sheet's virtually debt free. We've got a cash balance there, and we're now going to be profitable in generating some cash in Slovenia. So the plan for the plant is hopefully that can be financed with debt. We had a loan facility agreed with BNP Paribas several years ago for this purpose, for building the plant and for drilling 2 wells, which wasn't able to be used because of the permitting issue. So I'd imagine that once we're producing and generating cash and we've got production history and we've got no debt on the balance sheet, that debt financing this plant, whether it's a bank, whether it's vendor finance, or whether it's another...
I can understand that, especially nowadays with the more sophisticated ways of financing it. So what are the monthly revenues now that you've settled down selling the gas to INA?
So monthly revenue, total revenue this month should be somewhere in the region of 300,000 euros, and the upper and lower limits on the contract, if we're producing somewhere in the middle of that for next year, should see revenues to us of around 300,000 euros. So we've got 75% of the project, but we get 90% of the revenues because we've put in 45 million. So I'd expect...
And gas prices are higher in the winter than they are in the summer, is that right?
This is a good time to be selling the gas. It's good to get started before the winter peak in gas prices. So the gas price should be higher right through till February, March time, when it starts to drop back a little bit.
Excellent. So you're producing some decent revenues. You're going to finance the gas facility with debt, probably, which is appropriate because you normally do equity for exploration and debt for development and so on. So that through next year you should be continuing to build up the cash and the revenue. So what's the monthly burn? What's the G&A at Ascent?
So G&A, we had taken the G&A down to a very low figure over the last, because we've been without revenue for a long time. That's obviously increased now that we're in production. We've had to hire staff and we've got ongoing operating costs. So I'd expect of that sort of 300,000 euros that we'll be receiving in revenue, and every month we'll have roughly half of that adding to the bank balance. So the processing costs are reasonable at the moment, and our G&A, we've got a small office in Slovenia. We've got sort of 6 people there. And in the UK, it's really just
I'm glad you mentioned staff, actually, because in this whole process of getting to know you over the last few months and so on, is that I got the impression that you were the only guy there. I mean, I know you've got some people on the ground, but you don't really have a presence in the UK, do you? And so you're. I mean, I'm quite impressed by that sort of burn rate, because you're not.
Yes, I mean
I don't think you could be called a lifestyle company. Put it like
no,
that.
we don't have a nice office around Mayfair or anything like that. I mean, we gave up the office in London some time ago when we were trying to reduce costs to a minimum, when the company was sort of struggling to survive before we signed the ENA contract. Now we do have a board of directors here in the UK, and I've got an administrator who sort of keeps everything together without her.
But you are the only executive director on the board, aren't you?
I am the only executive director. We've got 3 non-execs who bring sort of a wealth of experience and keep me right. We've got Cameron.
And you're an accountant and a sort of finance director in your own right, really, aren't you?
Yes, I started off as finance director and then became CEO during when we were trying to cut costs and rationalise
of course, Cameron Davies I know very well.
Well, that's who I was going to mention. Cameron sort of brings a wealth of oil and gas experience to the board and keeps me right on the technical side. And then we've got Nigel Moore, who's a former Ernst & Young partner, who a wealth of oil and gas experience as well, but particularly keeps me right on the numbers and the corporate governance. And then there's Clive Carver, who brings a wealth of city experience.
I know, and I know him as well.
Very experienced board.
So tell me, I wanted to have a quick word about the shareholder base, because when you look it up, it's got a huge bunch at sort of Hargreaves, Lansdowne, and a few other bits and pieces, but it's primarily retail. Yeah, you don't have a institutional base or a cornerstone investor or whatever?
No, I mean, it's 100% retail really at the moment. We historically, Henderson became Lombard Odier, had a significant chunk of the company. It was really them that bankrolled us during the dark days when we were pre-revenue and pre-ENA contract. They were in 2012 they first came in, so they've exited over the last year and converted their loans and sold out. So we're left as a primarily retail-driven company, which it's great in some ways.
Well, it'd be great this evening when you sit down at 5:30 on the other end of the phone from hundreds of retail people asking you a lot of questions, which isn't a bad thing. Keep you honest anyway.
Well, I mean, it's great. We're very enthusiastic and active retail shareholder base, and we did need to raise money then a month or so ago. We were able to raise money through primary bid by tapping into a retail shareholder base very quickly. So it does give you the same access to funds, I think, that you would have if you've got a significant cornerstone investor.
Yeah. So before I go to the final bit, because the time is shooting past, but I wanted to see what you had in the way of ideas in terms of other growth. I mean, we've talked about the organic growth and within and keeping within one field and the gas production and the sales and so on. If you've got any ideas for moving to a different country or adding a different country or further assets in the same country or even acquisitions?
Well, yeah, we've got a lot of ideas and looking at a lot of things. I think there's a lot of room to grow within Pedasovci, within the project, as we've talked about adding wells and bringing in extra revenues there. There's other things we could do in Slovenia as well. We know the country, we've got good partners and good relationships there. And then where we're located, sort of on the borders with Croatia, Hungary, that sort of whole Central European gas market, I think, is very strong. There's a lot of good assets in the Pannonian Basin. So the idea is over the next 12 months that we look out and look at assets in Croatia, Hungary, Romania, the whole way through Central and Eastern Europe to try and find some other, similar to what we have in Slovenia, so with near-term production, can monetize the gas without learn from the painful process we've been through in Slovenia.
And and you don't consider yourself to be a potential target? You're not prey for anyone at the moment?
Well, that's always a question you get asked. And I mean, we've got a clean balance sheet. We've got an asset which is producing and generating cash. We're a London listed company, so people can buy shares anytime they want.
Right.
So
we've come to the end, I'm afraid, nearly. I always ask my victims to just give me a quick 1-minute thumbnail sketch of where you'd like to see Ascent in say 12 months time. You've pretty much outlined where you think you're going and how it all looks, but a quick sketch as to where you might like to see your shareholders might like to see you in a year's time.
Yeah, I mean, ideally where I'd like to be in a year's time is producing more gas from 10 and 11, hopefully on the verge of adding at least one, maybe two more wells. processing plant under construction and financed, hopefully with a bank or a financial institution, and hopefully with at least one other asset in the neighbourhood, which is going to generate cash as well fairly soon.
That sounds great. Colin Hutchinson is the CEO of Ascent Resources. Colin, it's been great to see you today. Thank you very much for coming by to Core Finance.
Thank you very much, Malcolm.
Bye-bye.